A very good evening, everybody. Are we all here? Yes? Give me a quick assurance you're able to hear me clear enough, and then let's begin. Shall we start? Is it all clear? Yes. So I will be starting with the rest of the session today. I'll be starting with the last part of our MTP. Are we all ready? I think we just have the last 2-3 questions left, isn't it? Come on, let's start the discussion without wasting any more time. Give me an assurance, please. Able to hear me? Is it all clear? Yes? Fine. Okay, so in the session today, guys, we are continuing with question number 3, subdivision C, right? Yesterday's session, yes, the last night when we had a session, we finished off the descriptive questions number 1, 2, and in question number 3, we had finished part A and part B. So now I'll be starting with question number 3, subdivision C. Okay, this one. Let's read the question first. From the following transactions relating to Mrs. Natasha, determine the amount chargeable to tax in her hands for assessment year 2021. Your answer should be supported by reasons. They are asking us what is the taxable income. Looks like a simple question. On 1st Jan 2020, being her birthday, she received a gift of rupees 40,000 by means of check from her father's maternal uncle. Now this question over here relates to gifts. Gifts come under which head of income? Tell me. Gifts come under the IFOS head of income, isn't it? Your gifts will come under the income from other sources, isn't it? Now listen to me. Before I proceed with the discussion, I want to discuss with you the meaning of relative. The meaning of relative as per your gift provisions. Now see, the definition of relative, you have so many definitions of relative in Income Tax Act itself. For section 80D, you have a different definition of who is a relative. For 80DD, you will have a different definition. For your gift provisions, you will have a different definition. Companies Act, again you will have a different definition. Accounting standards, even there you will have a different definition. So who is a relative? There are so many places where we have so many different definitions of relative. At the same time, it's also an important concept. Alright, so we are supposed to be aware of which definition of relative will apply to which provision. Now how do we remember this? How do we memorize this? A very common problem students face. I myself used to face this problem as a student. And how do I remember so many definitions of relative? How do I remember in which section what is the definition of relative? So what I used to do, I am telling you the same thing. Follow that, it becomes way simpler. See, I've realized that for a human brain, it's easier to remember pictures. It's easier to recall something which we have seen than something which we have read. Right? Even you would have noticed this, even you would have realized this, that when you see something and if you have to, recall that, it's easier than recalling something which you have read. So create a diagram. Under Income Tax Act, who is a relative? If I am the assessee, then relative includes my brother, relative includes my sister, relative includes my parents, relative includes all my lineal ascendants, relative includes all my lineal descendants. This arrow will indicate what? Lineal ascendants and lineal descendants. Parents, grandparents, great-grandparents, so on. Same with children, grandchildren, great-grandchildren, so on. And it will also include the brother and sister of my parents. Okay. Then it will also include my spouse. It will include my spouse's brother, my spouse's sister, my spouse's children, grandchildren, so on, lineal descendants, my spouse's parents, and my spouse's lineal ascendants. Okay, if you have this diagram in front of you, it becomes easier for you to recall this diagram, and you just put down this diagram as a rough note in your examination, and you see who is giving the gift. Does it come under this category or not? So who is relative for the purpose of gift section, guys? If I am the assessee, my brother, my sister, my parents, my lineal ascendants, my lineal descendants. my spouse's brother and sisters, my spouse's parents, lineal ascendants, lineal descendants, but I am not covering my spouse's parents, mothers and my spouse's parents, brother and sister. Brother and sister of parents, only my parents, brothers and sisters we are considering. If you notice these two lines I don't have for spouse, isn't it? So my parents, brothers and sisters, my mama, my uncle, my aunt, all of them I am considering as relative. But my spouse's uncle, my spouse's aunt, I am not covering. So this is who relative is under the income tax provisions for the purpose of gift. Okay, now listen to me. One more point it says is that we will also cover the spouse of all the above. So all the spouse is also covered. In other words, my brother and my brother's spouse, my children and my children's spouses. Alright, so this is who a relative is. Now let's come back to our question. What does the question say? The question says, I am receiving a gift from whom? From father's maternal uncle, which means assessee's father. Assessee's father, assessee's father's maternal uncle. Father's maternal uncle means father's mother's brother. Tell me, is he a relative? See, from assessee's father's brother, from assessee's parents, brother and sister, if I am getting the gift, then they are relatives. But from whom is the assessee getting the gift? From his father's uncle, which means from his father's father, which means from his grandfather's brother. Definitely not a relative, isn't it? Brother and sister I am covering of the assessee and of the assessee's parents. Am I covering assessee's grandparents, their brothers and sisters also? No. So 40,000 gift received on the occasion of birthday. From whom? From father's uncle. Father's uncle is definitely not a relative. Not a relative, hence what will your answer be? Taxable. But what is the amount? Amount is just 40,000. What did you study? Cash gifts up to 50,000 not taxable you would have studied. Isn't it? Here cash gift I have less than 50,000. It is not crossing 50,000. So nothing will be taxable. The person who is giving the gift is not a relative. So actually it should be taxable. But because the amount does not cross 50,000, that is the reason why it is not taxable. Tell me, do you understand this point? Yes? Any questions for anybody? Anything that you don't understand? Are we all clear with this discussion? Yes? Can we go and read the question once again? She received a gift of 40,000 by means of check from her father's maternal uncle. Father's maternal uncle, not a relative, hence taxable, but amount is just 40,000. 40,000 does not cross 50,000, hence it will be exempt, it will not be taxable. It is not taxable. Are we clear? I'll proceed. So this is about subdivision 1. Now coming to subdivision 2. On 12th February 2020, she acquired a vacant site from her friend for 1,32,000. The State Stamp Valuation Authority fixed the value of site at rupees 2 lakh for stamp duty purpose. See, what does this mean? The value of the house. What's the stamp duty value of the house? 2 lakhs. But how much is the assessee paying for this house? Just 1,32,000. So what is the case over here? Obtaining an immovable property for inadequate consideration. Do you agree with me? A 2 lakh worth property, assessee has purchased for just 1,32,000. So even this will come under gift provisions. Even this will come under gift provisions, isn't it? Which category? Immovable property for inadequate consideration. Now, immovable property, inadequate consideration, how to calculate? I generally teach my students to follow 6 steps. To make it a little simpler, the same 6 steps I will be showing you all as well. See, listen to me. Look at the way the calculation is being done. What are we calculating for? For question number 3, subdivision C, part 2. Okay, in part 2, a property, an immovable property worth 2 lakh rupees, I am paying just 1,32,000 for it. Obviously, immovable property for inadequate consideration. In such cases, I am supposed to follow totally 6 steps. Okay, now what are the 6 steps? Listen to me very carefully. Your first step will be what is the SDV of the property? Come on, see, look at what does the question say? What is the SDV of the property? SDV of the property is rupees 2 lakhs. So we have an SDV of rupees 2 lakhs. Okay. Then what is my step 2? My step 2 is what is the actual consideration? How much did I actually pay for the property? What is the actual consideration? How much am I actually paying for the property? I am paying just 1,32,000. Okay. Step 3 is a difference. What is the difference? How much lesser did I pay? 2 lakh minus 1,32,000, 68,000 will be the difference. Okay. So I can say this is the extent to which I got a gift. 68,000 is the value of the gift. But this 68,000 directly we cannot say if it is taxable or not. We will have to calculate step 4, step 5, step 6. Only on that basis we will be able to decide whether the 68,000 is taxable or not. So what is step 4? Step 4 will always be a standard number of 50,000. Okay. And step 5 will always be 5% of actual consideration. 5% of actual consideration. So 1,32,000 into 5%. Quickly calculate and tell me how much is it? 1,32,000 into 5%, 6,600, right? Step 6, pick the higher of them. Pick the higher of step 4 or step 5. So 50,000 or 6,600, which is higher? Higher is 50,000. These are the 6 steps. Step 1, what is the SDV? Step 2, what is the actual consideration? Step 3, see what is the difference. Then step 4, always standard of 50,000. Then step 5, 5% of your consideration. And step 6, which is the higher of step 4 and step 5. Okay. Now step 3, is this amount taxable or not? This was the value of the gift. Is it taxable or not? How to decide? If this 68,000 is more than step 6, if the 68,000 is more than step 6, then you will say it is taxable. If it is not more than step 6, you will say it is exempt. But here, because step 3 is more than step 6, we will say that step 3 is taxable. So 68,000 will be the taxable IFOS. Tell me, did you understand this, guys? Yes. So step 3 will be taxable or not depends on step 6. If step 3 is more than step 6, you will say step 3 is taxable. If step 3 is less than step 6, you will say nothing is taxable. Okay, did we all understand this part of the discussion? Tell me, any questions for anybody? Anything that you're not able to understand? Anywhere there's still a confusion? Please let me know in the chat box. Alright, I'll go to the next part of the discussion. So coming to the third question over here. So we are done with subdivision 2. As per subdivision 2, how much is taxable? 68,000 will be taxable. Then subdivision 3. She bought 50 equity shares of a private company from another friend for 75,000. FMV of such shares on the date of purchase was 1,33,000. So what has happened over here? Equity shares. Equity shares will come under movable property. So these movable assets are actually worth 1,33,000. But she paid how much for them? She paid just 75,000 for them. Obviously inadequate consideration, again movable property inadequate consideration, but don't worry, the 6 steps will apply only for immovable property inadequate consideration. If the property being sold, if the property being obtained is movable, I will not apply the 6 steps. I will simply see the difference. What is the difference? 1,33,000 actual value minus 75,000, which is the consideration which she paid. So how much lesser did she pay? She paid lesser of rupees 58,000. Straight away find the difference. Is the difference more than 50,000? Yes. Aggregate difference more than 50,000. Hence this will be taxable. Tell me, are we clear with this? Yes, guys. Simple. Okay, remember the 6 steps are only for immovable property. The 6 steps are only for immovable property, inadequate consideration. If movable property is being obtained for inadequate consideration, simply look at what is the difference. The difference will be taxed. Story over. Difference will be taxed if it is more than 50,000 aggregate. Immovable property, each transaction you will see separately. Cash and movable property, aggregate you will do. Okay, so this is it with subdivision 3 also, 58,000 taxable. So final answer, subdivision 1 not taxable because amount is less than 50,000. Subdivision 2 taxable because 68,000 was more than step 6, and step 3 also, situation 3 also taxable because difference 58,000 was more than 50,000. Okay, we are done with subdivision C. With this we are done with question number 3. Now coming to question number 4. Now this question number 4 that is given to us, there are totally 3 subdivisions in it, 4A, 4B and 4C. Coming to subdivision 4A first. Let's read the question. Nishant gifted rupees 10 lakhs to his wife, Nisha, on her birthday on 1st January 2019. Nisha lent rupees 5 lakhs out of the gifted amount to Krish on 1st April 2019 for 6 months, on which she received interest of 50,000. The said sum of rupees 50,000 was invested in shares of a listed company on 15th October 2019, which were sold for 75,000 on 30th December 2019. Securities transaction tax was paid on such sale. The balance amount of gift was invested as capital by Nisha in a newly business started on 1st April 2019. She suffered a loss of 15,000 in the business in financial year 1920, in whose hands the above income and loss shall be included in assessment year 2021. Support your answer with brief reasons. Listen to me very carefully. This question, please mark it extremely important. Just in case ICI decides to give you a tricky paper, a difficult paper, questions like this is what ICI is going to target. In my opinion, a question of this sort, a question based on this concept will be there in your upcoming examination. A question which is based on this concept. Now what does a concept say? Let me discuss that with you first, and then we will come to this question and we will solve it. Okay. By now all of you would have realized that this question is based on the clubbing chapter. Okay. See, the clubbing chapter tells us one simple thing. It tells us if an assessee transfers any asset to his or her spouse, okay, then from this asset, whatever income is generated, that income will be taxed in the hands of the assessee. From this asset, now who owns this asset now? The spouse. Assessee has transferred the asset to the spouse. What did the spouse give in return? Spouse gave either nothing in return or the spouse gave an inadequate consideration. You understand? In case the spouse has not given anything in return, or if the spouse has given inadequate consideration, in that case, from this asset, whatever income the spouse has earned, who is going to enjoy this income? Spouse's income, spouse will enjoy. But who will pay tax on this income? This income will be clubbed in the hands of the transferor assessee, and we will ask this transferor assessee to pay tax on this income. Are you aware of this concept first of all? Yes, income from transferred asset will be clubbed in the hands of the transferor. Okay, this is a principle. This is a simple principle, but under this itself there are 2-3 small points. Point number 1. If this income is further invested, and from this income if some more income is earned, that income will not be clubbed. Why? What am I supposed to club? I am supposed to club only income from the transferred asset. Any other income I am not supposed to club. Income from the transferred asset alone I will club. This income over here is not income from transferred asset. It is income from transferred asset. This will not be clubbed. Then who will pay? This will not be clubbed. So who will pay tax on this? The spouse only will pay tax on it. It is spouse's income. Spouse only will pay tax on it. You understand? Income from transferred asset, the transferor assessee will pay tax. Even though it is spouse's income, it will be clubbed in the hands of the transferor assessee. But income from such income will not be clubbed. Income from such income will not be clubbed in the hands of the transferor assessee. Okay. And the last point I want to discuss with you under this concept is that This asset may be in the same form or it may be in a different form. The asset may be in the same form or it may change its form. Even if the asset has changed its form, for example, let's say the assessee gave 5 lakh rupees money to his wife. Okay, and with this 5 lakh rupees, the wife, let's say she put this 5 lakh rupees into her business. So this 5 lakh rupees changed its form as business capital, as capital introduced into business. So from this business, profit earned will be clubbed. You understand? So the 5 lakhs can be in the same form or it can be in different form. From them, whatever income I earn will be clubbed in the hands of the transferee. Alright, so this is the concept. Are we all clear with the concept? Can I proceed to the solution to the question that we just read now? Yes. Just give me one moment. So I have the question here in front of me. It will be easier for us to read over here and keep looking at one transaction and see what will be the tax implications. First of all, Nishant gifted rupees 10 lakh to his wife on her birthday on 1st Jan 2019. Let's talk about this sentence. So first of all, gift given by Nishant to his wife. Tell me, is this taxable income for the wife? The wife has received this income from Nishant. First of all, tell me, will this income be taxed for her or not? Will it be taxable or will it be exempt? This will definitely be exempt. Why exempt? Because gift from spouse is exempt. When I had shown you the definition of relative, I told you even spouse comes under relative, right? So gift received from spouse will always be exempt. So even this will be exempt. Okay. Then point number 2. So what is the asset which Nishant is giving his wife? He is giving her 10 lakh rupees. So I can say that the transferred asset is rupees 10 lakh rupees. Transferred asset that Nishant has given to his wife Nisha. From this asset, whatever income Nisha gets, that will be clubbed in the hands of the transferor. What's the second sentence? Nisha lent rupees 5 lakhs out of the gifted amount to Krish on 1st April 2019 for 6 months, on which she received interest of 50,000. So what is the second transaction over here? Interest income of how much? Interest income of rupees 50,000. What to do with this? Listen to me very carefully again. This 10 lakh rupees, I will divide it into 2 parts. 5 lakh rupees is remaining in the same form only. But the balance 5 lakh is changing form into what? It is becoming a loan. You understand? 10 lakh rupees, imagine the situation, okay? Imagine Nishant has given 10 lakh rupees to Nisha. Out of that, Nisha is keeping 5 lakh rupees for herself. Balance 5 lakh rupees, she is giving off as loan to Krish. Okay, so in this entire story, what is a transferred asset? Transferred asset is 10 lakhs. Asset which the assessee has transferred to his wife for inadequate consideration or for no consideration is this money of 10 lakhs. Okay, now from this 10 lakhs, 5 lakhs is remaining in the same form. The balance 5 lakhs is changing into what form? The balance 5 lakhs, what is Nisha doing? She is giving off as loan. So that 10 lakhs, out of the 10 lakhs, this 5 lakhs is changing form into loan. Do we understand till here? Yes, the balance 5 lakh is changing off into loan. So from this what did I just tell you? Any income from the asset in the same form or different form, both I will club. So, any income I get from this 5 lakh, any income I get from this 5 lakh, both I will club. Okay. This 50,000 interest income is from where, you tell me? This 50,000 interest income which Nisha is earning, from where is she earning this? She is earning this from this loan. Isn't it? So she is earning this money from transferred asset in different form, 5 lakh rupees loan. So what will you do with this? This interest income of 50,000 is taxable, no doubt, but you will club it in whose hands? You will club it with whose income? It will be clubbed with Nishant's income. You will club this with Nishant's income. Do we understand this? Yes, this interest income of 50,000 rupees, we will club this with Nishant's income. It will be clubbed because this income is from loan. Income is from the transferred asset in a different form. Income from the asset will be clubbed. It will be clubbed in Nishant's hands. Alright, fine. So till here done. Then let's see what else is given to us in the question. Till here we are done. The said sum of 50,000. Which 50,000? This 50,000 which Nisha got as interest income from Krish. This 50,000 she is having in her hands. This she invested in shares of a listed company on 15th October 2019, which were sold for 75,000 on 30th December 2019. Securities transaction tax was paid on such sale. Let us talk about the question. Let us talk about these three lines alone. What is the point over here? First of all, tell me what, there's capital gains. I am very sure you would have spotted capital gains. 50,000 spent on shares, but 75,000 sale value. You tell me long term or short term. This will be long term or short term. Obviously, period of holding is less than 12 months, so has to be short term. So there is short term capital gain of how much? Short term capital gain, no indexation also. Straight away I can say full value consideration minus cost of acquisition 50,000. STCG will be how much? A straightforward number of 25,000. You agree with me? Yes. So we have an STCG of 25,000. Now listen to me. What to do with this 25,000? First of all, is it taxable or not? Yes, of course it is taxable. STCG is taxable. Now answer my second question. Is there any specific section under which we will tax this income? Have you learnt of any specific section under which we will tax this particular STCG? Yes, we have section 111A. Section 111A says you sold equity shares, short-term capital gain you earned, and you had paid STT. Alright, if all these three conditions are fulfilled, if it is STCG, 111A will get attracted. And under 111A, what is the tax rate? Tell me. Come on, quick. Tell me what is the tax rate. The tax rate for 111A will be 15%. Okay, fine. All this is okay. We have discussed about the income. Now coming to the bigger question, the more important question. This income will be taxed in whose hands, guys? It will be taxed in Nishant's hands, or will it be taxed in Nisha's hands? Let us think. This income is from where? This income is from this interest income, isn't it? This STCG I am earning from shares. Where did I get money to buy these shares? From this interest income. So this income of 25,000 is income from interest income. Do you agree with me? This 25,000 is not income from transferred asset. It is income from income. So will I apply clubbing provisions? We just discussed, we will not. We will not apply clubbing provisions. It will be taxed in whose hands? Nisha will pay tax on this income. Did you understand, guys? Yes, in the examination, don't just see if a question like this comes, don't just write about who will pay tax. You will immediately spot it is a clubbing question. Don't just focus on who will pay tax, Nishant or Nisha. Also think about the other relevant provisions and write them down. Did you see how we were discussing? We spoke about STCG. We realized period of holding less than 12 months. Hence STCG. We showed the calculation of STCG. We spoke about 111A. We spoke about 15% tax rate. Then we came to clubbing provisions. Follow the same manner. Did you understand, guys? Yes, I will apply section 111A 15%, but I will not apply clubbing provisions. Why? This is not income from transferred asset. This is income from transferred asset. That will not be clubbed. Did we understand this, guys? Tell me. Yes, any income if I am getting from this 5 lakh or from this 5 lakh, that alone I will club. Any other income I will not club. All clear? Fine. Let's go to the next question then. Let's go to the next question. The fourth point, the last part of this question. The balance amount of gift. What is the balance amount of gift? We have spoken about this 5 lakhs. So balance amount of the gift is this first 5 lakhs. The balance amount of gift was invested as capital by Nisha in a newly business started on 1st April 2019. So this 5 lakh is going into a business. Okay. So this 5 lakh also is changing form. It's going into a different form, isn't it? 5 lakh rupees was a transferred asset, but it is changing form into investment in business. It's a different form. From this business, she suffered a loss of rupees 15,000. So what is the last point in this question? We are having a business loss of 15,000. Okay. Now I am very sure you will agree, from where is this business loss? From this business. Where did I get money to run this business? From the 5 lakh given to Nisha by Nishant, right? So this business loss of 15,000 relates to transferred asset. Now listen to me. When income from transferred asset is supposed to be clubbed, obviously income also includes loss. If from this business had I earned income, that would have been clubbed in Nishant's hands. Same way, from this business, if I am incurring loss, even that will be clubbed in Nishant's hands. Why? Any income or loss from transferred asset has to be clubbed, same form or different form. The assessee Nishant had given 5 lakh cash. This 5 lakh got converted into capital invested in business. From this business, I am getting a loss, I am incurring a loss of rupees 15,000. This will definitely be clubbed. Okay, so this will be clubbed with whose income? It will be clubbed with Nishant's income. So this loss will be considered in Nishant's return of income and not in Nisha's return of income. Do you understand? Yes, even loss clubbing provisions will apply. This is a very common misconception that students generally have. They think only income to be clubbed. No, why not? Why not loss also? Income also includes loss. Wherever I have the word income written, obviously includes loss. I say return of income. Does it mean if it is a loss, no need to file? No, I still have to file. You understand? So, return on income, I say income tax. We use the word income everywhere. Income always also includes losses. So, clubbing of income will also obviously also include losses, clubbing of losses. That is it with this question. They were just asking us about the tax implications, whose hands, which income, which loss will be clubbed. So the gift, original gift, not taxable at all, exempt. Interest income, club it with Nishant's income. STCG don't club, Nisha itself will pay tax, and business loss also to be clubbed with Nishant's income. That is it with this question. Tell me, did we all understand? Can I proceed to the next question now? Question number 4, subdivision B. Can I go to the next question? Any place where any of you getting stuck with? If any doubt, please mention in the chat box. Okay, I'll proceed to the next question meanwhile. Okay, coming to question number 4, subdivision B now. Let's see what does this question say. The following are the details relating to Mr. Rajesh, a resident Indian, relating to the year ended 31st March 2020. STCG of 1,40,000, loss from house property 2,20,000, loss from speculative business 50,000, loss from card games, brought forward long-term capital loss, dividend from Shaiba Limited, and loss from tea business. Mr. Rajesh's wife Isha is employed with Shine Limited at a monthly salary of 25,000, where Mr. Rajesh holds 21% of the shares of the company. Isha is not adequately qualified for the post held by her in Shine Limited. You are required to compute taxable income of Mr. Rajesh for assessment year 2021. Shall we start, guys? Yes, it's very obvious. This question is more of a set off and carry forward based question. Okay, now listen to me. I am going to the place where we work out answers. Answer to question number 4, subdivision B. Particulars, amount and amount. As we keep reading the question, we'll keep solving point by point. Okay. The first point, we have STCG. How much STCG do we have? We have STCG of rupees 1,40,000. Okay. What is the next information given to us? We have loss from house property. Generally what I do is all the losses I keep them separately. At the end I handle them all together. Okay. So loss from house property, I'll set it aside 2,20,000. I will remember to handle it at the end. Then we have one more loss. We have speculation loss. Loss from speculation business 50,000. Even this I will set aside. Then we have loss from card games. Should I set this also aside? Not required. Why not required? Because loss from card games cannot be set off against any income. Loss from card games cannot be set off against card games income, because from card games, from lottery, from horse races, whatever income we get against them, we cannot set off any loss, any expense. They are supposed to be taxed on a gross basis. So against what else will I adjust? Even against other sources, I am not allowed to adjust. So loss from card games, I am supposed to ignore. So I won't even write down in the list of losses. It's anyway something which is supposed to be ignored. Then we have brought forward LTCL. You tell me first of all, long-term capital loss can be carried forward for how many years, guys? Come on, I'm actually going to wait for your answer. Tell me. Long-term capital loss can actually be carried forward for how many years? It can be carried forward for 8 years, isn't it? Now this loss that they have given to us in the question was loss incurred when? It was incurred in assessment year 15-16. Assessment year 15-16 plus 8 years if I do. How much will that be? It will be assessment year 23-24. What is my current assessment year? Only 2021, which is before this, which means we are still within that 8 years limit. We are allowed to adjust the loss across 8 years and we are within that limit of 8 years. So no problem. Okay, fine. Now listen to me. So which means I can consider that long-term capital loss. So I have brought forward long-term capital loss for which 8 years are not over till now, which means it's still an eligible loss. How much do we have? We have long-term capital loss of rupees 86,000 brought forward. Fine. Even this I will set aside. Then we have dividend from Shaiba Limited, rupees 11 lakhs. Does any special provision strike your mind? We all know this will go under the head IFOS. But does any special provision strike your mind? Yes, we do have a special provision for dividend. Section 115 BBDA says that if my dividend income put together from all the companies, 222A plus 222B plus 222C plus 222D, excluding 222E, the remaining four dividends from all companies put together during the year, if it crosses 10 lakhs, then on the excess beyond 10 lakhs, 115 BBDA will apply. 115 BBDA says on that excess dividend income, excess beyond 10 lakhs, I will charge 10% tax. Okay, so 115 BBDA, will it apply in this question? Yes, it will apply, because how much is the total dividend? 11 lakhs. So how much excess do we have? We have an excess of rupees 1 lakh. Against this excess of 1 lakh, no loss can be adjusted, no expenses can be reduced. This 1 lakh will be taxed on a gross basis at what rate? It will be taxed at 10%. This becomes a special rate income. Up to 10 lakh, no tax. On the balance in excess of 10 lakhs, on the excess, I will ask you to pay 10% tax. This is how we understand. Tell me, are we clear with this 115 BBDA? Fine. Okay, let's go to the next part of the discussion now. What does the question say next? Then we have loss from tea business. We have loss from tea business, how much? 96,000. See, here they did not say tea is grown and manufactured. They are saying loss from tea business. So looks like it is loss from tea trading business. Had it been tea grown, manufactured and then being sold, then we would say partly agricultural, partly business. But nothing is said like that. So you can assume that it is tea trading. But then if you want, you can also apply the rules which say 40-60. You can apply all that and you can say out of this 96,000, partly I will say business, partly we will say agriculture. It depends on you. I have given you both options. If you want, you can say that this entire 96,000 is what? Entirely it is business loss, fully business loss. Why? Because they did not say tea was grown and manufactured. They are just saying tea business. So it might be tea trading also. In that case, entire 96,000 you will say is business loss. But then if you want, you can also apply the concepts which you have learnt, and you can say that you can assume that it is tea grown, manufactured and sold. So in that case, what will you say? Composite income. 40% will be business income or business loss in this case because it is loss, and the balance 60% will be agricultural loss. So you can do it either way. I have given you both the options. Let us pick this option because this is the option which has been followed even in your solution. So 96,000, 40% is business loss and 60% is agricultural loss. Agricultural loss we will anyways not consider. Agricultural income is exempt. So obviously agricultural loss should be ignored. So I will now consider just the business loss. What will be the business loss portion? Come on, calculate. What is 96,000 into 40%, guys? How much do you get? 38,400, isn't it? So we will consider just that. Oh, I just realized this page was not visible for you all. So I was telling you that this 96,000, I have two choices. Either treat the entire thing as business loss, or I can divide this 96,000 as 40%, 60%, 40% business loss and 60% agricultural loss. This is if I am going to assume assessee is in the business of growing and manufacturing tea and then selling it. And you will, if you want to assume entirely it is business loss, you will have to assume tea was not grown. It just some tea trading or some tea wholesale business and all. Okay, so come on, anyways, I am choosing this method. I am choosing the 40-60 method. So what is 40%? 40% comes up to rupees 38,400. Fine. Going back to the answer now. So I have business loss. Business loss to be set off 38,400. Okay. Anything else? Anything else given to us in the question? Yes, there's one more thing. The para given to us. What does the question say? Mr. Rajesh's wife Isha is employed with Shine Limited at a monthly salary of 25,000. His wife, assessee's wife, is earning salary of 25,000. And in that company where his wife is employed, there Mr. Rajesh holds 21% shares. This is a concept again in clubbing chapter which you would have studied, that if the assessee has at least 20% interest, 20% shares in a company, you will say that the assessee has substantial interest in the company. And in case assessee has a substantial interest in a company, and in that company, if assessee's spouse is employed without any qualification, without any knowledge or experience, then whatever salary income the spouse earns, that salary income will be clubbed in the hands of the assessee. Right? So what are the conditions? Number one, my assessee should be having substantial interest in the company. Substantial interest means what? Substantial interest means he must be holding at least 20% shares in the company. And point number three, in that company, his spouse is employed for no technical qualifications, for no professional qualifications, for no knowledge or experience. Still, she is getting salary income from there. This salary income has to be clubbed in the hands of the assessee. We will club this salary income into the hands of the assessee. Okay, so this 25,000 salary income actually earned by his wife, but it will be clubbed in the hands of Mr. Rajesh. Okay, so we will have salary income. Now, how will we calculate the salary income? What is the salary income? 25,000 per month. So, 25,000 into 12. Don't forget to subtract the standard deduction of 50,000. So, how much will we get? 25,000 into 12 minus 50,000. We will get 2,50,000. Yes, this is it with the question. We just have to handle the losses now. Okay, let's look at the losses one by one now. first of all, let us see if any intra-head adjustment is possible. Intra-head means within the same head, is that possible first. Always remember, you're supposed to go ahead with set of chapter in 3 steps. First, you should always look at intra-head. In other words, first you should always look within the head. Then you should do inter-head, which means one head with the other. And only then you should adjust brought forward losses. So this is the manner in which we are supposed to handle the set of chapter. So same way we will do. We will first do intra-head. First of all, capital gains head we have over here. Under capital gains, in the current year, have we incurred any loss? Tell me yes or no. Come on guys, answer. In the capital gains head, current year, have we incurred any loss? Tell me. Come on guys. No, right? Current year we have not incurred any capital loss. Fine. Then IFOS. IFOS, this is 115 BBDA. Anyways, we can't adjust any loss against this income. Fine. And then we have salary. So intra-head, nothing possible. Now talking about inter-head. Inter-head adjustment. Loss from house property, speculation loss and business loss. We have these 3 options. Now first of all, we have loss from house property. Against what will I adjust this loss from house property? We can adjust it against STCG. We can also adjust it against salary income. So loss from house property can be adjusted either against STCG or it may be adjusted against salary income. Against IFOS, I cannot adjust this loss because this is 115 BBDA. Against IFOS, against this 115 BBDA IFOS, I cannot adjust any loss. See, generally IFOS income, if you have, you can adjust losses. Okay, this is also a very common question students have. So what if it is IFOS? It is still income. Even against IFOS, you are allowed to adjust losses. But 115 BBDA IFOS, your card games, lottery winnings, horse races IFOS alone, you are not allowed to adjust. Okay, so this loss from house property, 2,20,000 can be adjusted against STCG or salary. But under which step am I trying to fit it into? I am trying to fit it into inter-head. You tell me, inter-head, loss from house property, at the maximum, how much can we adjust? Tell me, inter-head, loss from house property, at a time, in a year, how much can we adjust? Even though I have 2,20,000 loss from house property, I can adjust only rupees 2 lakhs. Intra-head, adjust how much ever you want. But inter-head loss from house property in a year restricted to rupees 2 lakhs. Okay, so I have 2 options, STCG or salary income. I will always pick my special rate income first. So I will set off my loss from house property from this special rate income of STCG. How much will I set off? I have 2 lakhs to set off, but I can set off only 1,40,000. So I will restrict it to 1,40,000. I still have 60,000 left. That 60,000 I will adjust off against salary. So loss from, I see I can't adjust entire 2,20,000, just 2 lakhs I can adjust. Out of 2 lakh, 1,40,000 I adjusted against STCG. The balance 60,000 I will adjust off against salary. And how much will I carry forward now? I will carry forward the balance 20,000. Are we clear with this? Okay. Now what is the next loss we have? We have speculation loss. Speculation loss, what does the provision say? Speculation loss can be adjusted only against speculation income, isn't it? Speculation loss can be adjusted only against speculation income. Do we have any speculation income over here? No, we don't. We don't have any speculation income. So this will anyways have to be carried forward. Then LTCL. LTCL can be adjusted. This is anyways brought forward LTCL. So not right now. Only after inter-head, only then I will go to brought forward losses. So I am keeping this pending. Now business loss. Business loss, against what can it be set off? It can be set off against STCG or it can be set off, can it be set off against salary? Tell me, can we adjust business loss against salary? What do you think? Yes or no? Is it allowed to set off business loss against salary? No. Business loss can be set off against any head of income except salary. And we don't have any other head of income left. STCG fully utilized. STCG has become 0. It is fully utilized. IFOS, this is 115 BBD IFOS. Set off is not allowed. Salary income, I still do have 1,90,000 left. But I can't adjust business loss against salary income. So what do I do? What do I do now? I will have to tweak the answer a little bit. I'll have to change the answer a little bit. Why? Because instead of adjusting loss from house property against STCG, I will adjust business loss against STCG. Because loss from house property can anyways also be adjusted against salary income. Loss from house property, there is no restriction. Loss from house property can be adjusted even against salary income. So why should I waste that? Why should I pay why should I pay tax on the entire salary income? If I am not able to adjust business loss against salary income, and if I can adjust business loss against STCG, loss from house property I can adjust against STCG, also against salary income. So what should I do now? I should change the answer. Loss from house property I should adjust against salary first. And the business loss I should adjust against STCG. Are you understanding? When I do this, my answer will be better. Always remember, in the examination you are working out the question not from the perspective of giving the government a lot of tax. You should always work from the perspective of your client. You should try to save income tax. You should try to apply income tax provisions and not evade tax, but pay minimum tax as much as is required. So what will I do now? I will change the answer. You see how I change, okay? Instead of doing it this way, what I will do is that this business loss I will adjust off against STCG. How much business loss will I adjust? 38,400 I will adjust. How much will I get? Tell me. 1,40,000 minus 38,400, how much will I get? I will still get 1,01,600, isn't it? I still have so much STCG left. Against this STCG, I will adjust loss from house property. So loss from house property, how much will I adjust? From this, I will adjust off the full 1,01,600. So the balance STCG will be 0. IFOS remains 1 lakh. Salary income from 2,50,000, I will adjust the balance loss from house property. I am allowed to adjust 2 lakhs. Out of 2 lakhs, 1,01,600 we already adjusted against STCG. So how much are we still left with? I am still left with 98,400. I will adjust that. And what is the balance that we are left with? The balance salary income. 1,51,600. So what will be a total income now? 1 lakh of IFOS and 1,51,600 of salary income. We will be left with 2,51,600. Do we understand this? Tell me. Any questions for anybody? Come on. Anything that you don't understand, pause for a moment and just look at the answer. Are we all clear with it all? Yes. So instead of adjusting earlier, what did we did? Earlier we did LFHP against STCG, but then we were left with no income to adjust business loss with. So that is why we changed the answer, and now what are we doing? We are adjusting business loss against STCG, and from the balance we are adjusting LFHP, and then the balance loss from house property we are adjusting against salary income. So my total income will be 2,51,600. All clear, guys? That is it with this question also. Check, are they also asking us to find tax liability? No. They are just asking us to compute taxable income and how much loss is to be carried forward. How much loss is to be carried forward? We are supposed to carry forward loss from house property of 20,000, speculation loss of 50,000, and this LTCL, we don't have any LTCG left. All of you know long-term capital loss can be set off only against long-term capital gain. We don't have any LTCG, so even this we will automatically carry forward to the next year. Right? LFHP 2 lakh has been set off. Business loss of 38,400 has been set off. We don't have any other losses apart from this. All clear? That is it with this question. If you look at your MTP solution, in the solution what they would have done is that the entire loss from house property of 2 lakhs, they would have adjusted from salary income. Even that is okay. Even that is not wrong. You can do that way. That will be easier. It will be an easier method of finishing it off. By split LFHP into STCG and salary. Adjust of the entire 2 lakh against salary. But that is not the preferable choice. Why? Because you will still be left with 1,01,600 in that case. So you are going to ask your assessee to pay 15% tax on that income. Isn't it? But then otherwise, if total income is 2,51,600, assessee will fall only in the 5% slab. Are you understanding? 111A, you will ask if this STCG, if it is 111A STCG. Does the question say it is 111A STCG? The question does not say. But had it been 111A STCG, then that will be taxed at 15%. And your other income will be taxed only at 5%. So always try to finish off the special rate incomes. So even if you had done it entirely against salary income, exam perspective, it would not have been wrong. But from the practical perspective, when you start doing your articleship and all, your client will want you to calculate the minimum tax payable. So in that case, he would prefer you to do it this way, assuming this was 111A STCG. Okay, all clear? Fine. So that is it with this question, guys. Alright. And then we have just one last question, difference between TDS and TCS. This is anyways just a theory question. That part you can handle. And then just the GST part. So with this, we are done with our income tax MTP. We took 3 days, but we've done it in proper depth with very good discussions, right? And we've worked out all these questions one by one. If you still have any questions in any of them, you can always reach out to me. My contact details are given in the description box. Okay, so we'll close here, guys. Then we'll close for today. That is it with the MTP. We'll close. Fine. Thank you, guys. Ending the stream over here. Please make sure you've actually worked out the questions, right? Okay. Thank you, guys.